feel very good.
So the stock's just under 120. You've got a $150 price target on it. What's the time frame for that? Because that's another 25% increase, even if you think that they could have a little bit of a rougher time over the next few quarters.
Yeah, look, it's a 12-month price target. And, I think that they have a very strong 12-month window ahead of us. The new products that they're shipping, Blackwell, are effectively accounted for through 2025. So, the question becomes kind of growth thereafter. And when that's the debate, it gets a little bit harder for the stock to work. For me, I like the stock best when there are these near-term issues that they're kind of working through, because I have a lot of faith in just how strong this business is. And so, you've seen this a couple of times now over the last year and a half. You saw lead times come down in the early part of this year. People sold the stock on that. When there was concern that Blackwell was almost too good and we'd have this kind of pause in Hopper sales, that drew down the stock. Then we had the delay. All those things sort of are great setups because, you're selling picks and shovels into a gold rush. And the strength of the gold rush is kind of the main thing here. It doesn't, the new products are really important and I want to get them out. But, it doesn't really change how good these numbers are. So for me, tactically, we've liked it better when you have these issues. You still have these questions overhanging the stock. So I'm not necessarily calling for 150 right away. But, I think these are a good buying opportunity, these issues that have been dragging on the stock of late.
Morgan Stanley analysts claim that NVIDIA's Hopper and Blackwell GPUs are in high demand. The investment bank stated in a note on Tuesday that NVIDIA's Blackwell chips are now being produced in large quantities, and the firm has tremendous room to grow given the demand from its key clients. According to Morgan Stanley, Oracle recently revealed plans to construct a zettascale AI supercluster with 131,000 NVIDIA Blackwell GPUs, which would provide 2.4 zettaFLOPs of AI processing capability. Oracle's desire for increased GPU supply has improved NVIDIA's outlook and that of its semiconductor sector partners. The bank stated that Oracle apparently asked for extra GPU supply at a recent event, which was good news for the Asia AI semi/system supply chain. After initially estimating 70,000 wafers per month, Morgan Stanley now projects TSMC's CoWoS, chip-on-wafer-on-substrate, capability to reach 80,000 to 90,000 wafers per month by 2025. The demand for NVIDIA's Hopper GPU is expected to stay high in the near future, allaying worries about possible inventory problems. Sovereign AI initiatives and smaller cloud service providers are increasing their need for Hopper H200 chips, according to Morgan Stanley. It is anticipated that 450,000 units of Blackwell chips will be created in the fourth quarter of 2024, which may mean over $10 billion in revenue for NVIDIA. While NVIDIA is currently working to resolve some technical issues with its GB200 server racks, Morgan Stanley also points out that these problems are a typical part of the debugging process for new product releases. According to reports, Han Hai, NVIDIA's assembly partner, plans to start shipping the GB200 server rack by the end of Q4 2024. As NVIDIA continues to profit from the rising demand for AI processors, Morgan Stanley retains a bullish view on the company's AI supply chain, choosing it above the memory, PC, and cloud segments. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
Let me just ask you, Joseph, what happened this week? What's pushing the momentum one direction or the other on the stock?
Yeah, I think for me, the bigger surprise was what happened in the prior couple of weeks. The quarter was really good. They beat by $2 billion, which has never happened until NVIDIA started doing it a year and a half ago. And I understand they're wrestling with these expectations issues. And there's some gross margin questions that came about, but I was really surprised at the sell-off. This is our top pick. Demand is very, very strong. And, at this point, focusing on the sort of product cycles and things like that, it's very important. We want to see the company execute to that. But really, the key issue is just the strength of the business. And we heard that from Jensen this week at a conference. We've heard that from a number now of significant executives on the customer side, how much they're committed to these workloads. So I think this is still, a very compelling story. And again, to me, I don't know exactly why it was up this week. I don't know why it was down so much last week. But the stock is very reasonably valued. with very good growth prospects here going forward.
Will Blackwell have lower gross margins versus Hopper?
I think maybe a tiny bit. I think that when the product was launched in March, they had sort of discussed some price points, on CNBC at one point, and that's a little bit unusual. I think they're very focused on, can we continue to provide value? Can we continue to grow the market? And I think they're probably more focused on that than the specifics of gross margin. There's going to be a little bit of pressure here in the next couple of quarters, which is really just the early stage of that. We're ramping it up. There's going to be low yields initially. I think they've sort of said over the full life cycle, the gross margins will be similar, but they're also expanding the scope of products. There's going to be a microprocessor with Grace. There's going to be an NVLink switch that they sell into these racks. There's a lot of things that they're selling that could have a little bit lower gross margin. So we have gross margins down by about a point next year. I don't think it's that big a deal in the context of how high the operating margins are and how much operating leverage there is. But I think it is. The answer to your question is yes, it is just a tad lower. But that doesn't change the fact that the gross margins are still.
In the computer business, NVIDIA is the manufacturer of the most covered graphics processing units, GPUs. 98% of data center GPU shipments were made by the company last year, and its chips are the best at speeding up AI tasks. In recent words from Forrester Research, modern AI would not be possible without NVIDIA GPUs. NVIDIA has a market share of more than 80% in AI chips. Naturally, additional rivals have entered the market as a result of the massive demand for AI infrastructure. This covers both large tech businesses like Alphabet, Amazon, and Apple, as well as chip makers like Advanced Micro Devices and Intel. They've all created unique AI accelerators or other GPUs. NVIDIA's CEO, Jensen Huang, is certain that his chips have the lowest total cost of ownership, nevertheless, implying that when related costs are taken into account, chips with lower price points may end up costing more. Nevertheless, NVIDIA will most likely lose some market share in the next years as custom AI accelerators gain popularity. However, losing a little portion of the market does not mean losing market dominance. Because of its strong ecosystem of developer-supporting software and excellent hardware, NVIDIA enjoys a deep competitive advantage over its competitors. In a recent note, Morgan Stanley analysts expressed as much. Since 2018, there have been numerous attempts by commercial competitors like AMD and Intel, a number of startups, and a number of custom designs that have all presented challenges to NVIDIA. The majority of those have failed. It's challenging to compete with NVIDIA, a business that invests $10 billion annually in research and development. On NVIDIA, Wall Street is extremely optimistic. Of the 64 analysts who cover the firm, the stock is rated as a buy by 94% of them, and a hold by the remaining 6%. Not one analyst suggests selling the stock at this time. A 29% increase from NVIDIA's current share price of $116 is implied by the company's median price objective of $150 per share. Wall Street experts project that throughout the next 3 years, NVIDIA's earnings will rise at a rate of 36% per year. The current price of 54 times earnings appears fairly acceptable when compared to that consensus expectation. With such numbers, the PEG ratio is 1.5, which is significantly less than the 3-year average of 3.1. This is encouraging for potential investors. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Space industry, what do you think are some of the things that where we're seeing some major growth or money being put to work?
So no doubt, the top opportunity for investors in space is applying AI to these massive data sets that we're getting off of satellites. So we have decades of imagery that we've been collecting, government and commercial satellites. They have been collecting optical imagery, radar imagery that allows us to see through clouds and at night, all different types of sensors. And we have not been able to derive really interesting insights from that data as of yet. AI is going to help us do that. It's going to help us get our arms around all these massive data sets to understand change detection, what is happening on the surface of our planet, and how can that inform big decisions and help us understand and address the biggest challenges that we're facing here on Earth.
So what are some of these companies that you're watching? I mean, I saw Google, Microsoft, Amazon, and a few others, publicly traded companies mentioned in your notes. I mean, what companies are you following really closely?
Yeah, so it's everything from the satellite infrastructure, the satellites that are on orbit. There's a couple of publicly traded names right now. There's Planet, Black Sky, Satellogic, but there's many more in the private markets that are coming up and doing very interesting things that you might see on the public markets in the near future. There's also the distribution companies, the companies that are harnessing that data from orbit and making it accessible to the tech community, right? Those are like the Trimbulls and the Garmins that you see in the UFO exchange. And then you've got the software applications, the folks who are building end user applications that are addressing end markets.
At J.P. Morgan, Jonathan Linden and Joe Seidel think capital investments in artificial intelligence, AI, infrastructure are still gaining traction. They predict that over the next 5 years, investment by the 5 hyperscale cloud companies, Microsoft, Amazon, Alphabet, Meta Platforms, and Oracle, will climb at a rate of 24% yearly, up from 15% annually over the previous 5. Furthermore, Linden and Seidel anticipate that by the end of the decade, AI will have a discernible effect on productivity. Although that may seem like a far-off future, they clarified that there is really less time passing between technological advancement and increases in production. Consider this. The introduction of the personal computer did not boost economic productivity for 15 years. I might finish in 7. According to International Data Corp, the impact of artificial intelligence on the world economy is expected to increase from $1.2 trillion this year to $4.9 trillion in 2030. In that case, at the end of the decade, AI would represent 3.5% of the world GDP. The implications of that estimate are enormous. Not only are AI investments beneficial, but they are also essential for companies looking to stay competitive. In the future years, doubters will surely dismiss AI as an overhyped technology, just as some did with the Internet in the 1990s. And just as Internet stocks did in the early 2000s, AI equities can eventually see a sharp decline. However, the doubters will eventually be disproved, and Nvidia's stock price may rise significantly in the future. In fact, Beth Kindig of the I/O Fund thinks that Nvidia might reach $10 trillion in valuation by 2030.